I've done a lot of thought into this with inheritance and stuff, and I weirdly I was on BBC 5 Live like in the early hours of the morning. So they were interrogating me about my stance on inheritance, all that sort of stuff. And I've done a lot of studying into lottery winners and inheritance winners and stuff. So the immediate trap that you must not fall into is what's called the lottery trap. So I think it's something like 80% of lottery winners end up with nothing within the first 10 years. That's crazy. Now, it doesn't matter how much money, it all depends on the ratio of your income to what you get in. So, for example, if you take a random person and let's say they've got a job or whatever, and their take-home income is £2,000 a month. Okay. In fact, let's do it on a yearly basis. So £2,000 is 20. Let's call it 25k a year. Now, I think it's been a while since I've studied it, but if someone comes into a 10x amount or more, shit happens in your brain where your brain goes, ah! So if this person who's only accustomed to £2,000 a month coming in, or say 25 grand a year, suddenly 250 grand just pops into the bank account, all of a sudden crazy stuff happens inside the head. So what normally happens is a big chunk of that goes into capital purchases. So it's not uncommon that before you know it, you've only got 100 grand left because of most people pay off the mortgage, they buy a car, they have a couple of nice holidays, they finally change their wardrobe or whatever, and before you know it, let's say it's halved, so you've got 125k there now. Now a lot of your capital expenditures disappeared, but then you enter the constant mental anguish of shit. What do I do with this? What do I do with this? You don't want it to bleed, and you may end up dipping into it to cover stuff. So before you know it, you've got 100 grand, and then So the thing that I've discovered is that you have this, again, another seesaw. It wouldn't be a trading pub without a seesaw. Is that there's this knowledge level and then a capital level. So what always happens with lottery winners is obviously the capital has gone way higher, way higher than the knowledge level, and so the capital will nearly always follow back to the knowledge level of the beholder. So I'm going to say that again. The knowledge level will always fall down to the knowledge level of the beholder. So the key thing is, you really got to make sure that the knowledge is up so that you are a person that can comfortably look after whatever amount it is. Okay. Now you've been around in RT, etc. for ages, so you've definitely got the knowledge there. So for you, it's not. I'm not too worried about the knowledge thing, but the key thing is trying to convert that capital into cash flow. So one of the other things is a lot of people, as in the average lottery winner, when they come into, or any person that comes into a 10x amount bigger than their take-home income, they don't know how to convert that into cash flow. So this is why I opened up the new WAP methodology type thing, because you have to come up with something to come up with a cash flow. So what you don't want to do is, well, two things. You need cash flow which is not a job. So cash flow derived from your own vehicle of some sort, not a job. And by doing that, it means you don't bleed. You don't bleed your capital. Don't bleed. And then the second thing, so at the very least, you're preserving. Now, you'll probably lose to inflation, because as we know, real inflation is about 15% a year. So you could lose out on purchasing power to the tune of, 15% a year. But at least you're not bleeding, a nominal amount. And then the next point is growing that capital. Now, if you have a vessel that is cash flowing, maybe you can use that capital to grow it even more. But I guess the easiest setting up a business for most people will be a J-curve experience. Let's say that's the 0% line. Your first business, you'll probably get a bomb. Second business, you're probably going to bomb. Third business, probably the same, you're going to bomb. And it's probably lucky business number 3, 4, or 5 where you'll go down a bit and then it'll be a J-curve sort of thing. So again, you're quite right that if in your boots, or again, if I had an inheritance, whatever, I would be doing what you're doing, putting it into crypto, because there are so many bullish things happening in crypto right now where I literally can't find a realistic universe where we don't see another bull market. Now, it may not peak in 2025. It may, cycles may be dead. But either way, BlackRock is getting into crypto. Like, you could just end there. That's it. That's all you need to know. BlackRock is getting into crypto. And therefore, up is pretty much the only direction in the medium to long term. So yeah, putting it into crypto, you're doing the right thing. You've got the crypto knowledge already. You may want to play with business. And this is why, go back to that, watch that WAP methodology video. It was like a 2.5 hour thing. We covered a lot in here, but this is how you can set up a business with like no money, so that way you don't even have to touch your pot. Now, I've been skirting around the edges of your question. You've been obviously calculating if Casper or Bitcoin or ETH or any of these plays work out, you're then swimming in a truckload of profits. So it then just comes back to the same thing. Let's say Casper does its thing and you've got a big amount in it, and you've now, I don't know, let's just take a random number which is big for everyone. Let's take 5 million, okay? I don't care who you are, 5 million quid is a lot of money for pretty much anyone. So magic one time, you've now got 5 million in cash. All of a sudden, the problems that you're now about to experience are way heightened. And this is where you can then end up in a slow bleed situation. So because everyone in general has the same sort of like a £5 coffee is a £5 coffee, or £3 coffee is a £3 coffee for everyone, right? Whether you're a millionaire or someone who's not a millionaire, you know there are a certain amount of costs which are pretty standard across the board, right? So this is why a lot of wealthy families bleed over a long period of time, because what happens? Let's just exaggerate this. Let's say it's 50 million, right? A lot of people will then have a family office or some sort of IFA, etc., and they, due to all these, advisors, etc., they're like, okay, preservation is key, blah blah blah, and then they get happy with 5% a year, because what the IFA and all these finance people around them have said, oh look, all you need to do is give your money to me, I'll put it in these bonds, these treasuries, blah blah blah, and you're going to get 5% per year. So of your 50 million quid, what you're going to get? 2.5 million quid a year. So all of a sudden, just in interest alone, you're getting 2.5 mil per year. You're happy as Larry because you can do F all. So 2,500, what is that per month? That's what, like 190 a month? 200. So it's all of a sudden, you're now getting 208 grand a month for doing nothing, whilst your cash is parked in the most bulletproof of things. You would have been diversified up the yin yang, blah blah blah, and yeah, you're getting your 5% a year. So this person can now be, thumb and bum, mind and neutral for the rest of their life because they're getting 200 grand a month in. There's only so many things you can buy, right? Yes, you can buy a bunch of houses and then a bunch of cars, and you maybe splash out on a yacht, or you just rent a yacht or whatever, but eventually you get into the point where you've got 200 grand a month coming in and you can't spend it all, and you don't care about what ROI you're making, because every month you're growing 2.5 million a year. So the average family, the average lottery winner than average or whatever, in their head they'll be like, right, next year I'll have 52.5 million, and the next year after that I'll have north of 55 million, etc. So in your head you think you're getting richer by that, when in fact the real issue is that you're actually bleeding 10%. You know, the money hurdle is this. So you're actually losing 10% in purchasing power. So you won't notice it for a while, but you know, over 20 years you could lose your whole wealth. I mean, just check out the Vanderbilts. Vanderbilt family. They used to be one of the richest families on the planet. Now there's not a single millionaire Vanderbilt. Now, obviously, drugs and gambling were an issue there, but there are many others.